Friday. Just going to make sure that everything's showing up okay. We're streaming both in the public room this morning and the premium room. Just going to let it load up here, make sure that everything is coming through okay.
Welcome to the Andrew and Jason show.
Yeah.
There we go.
Yeah, we have the cheapest tickets in town, right? No, there we are. Okay, so it's looking like it's showing up okay here.
Yeah.
All right, so I was going to summarize a few things as far as trading and things like that, but those of you in the premium room know we've been doing pretty good this week. I mean, we had a little choppy stuff going on here and there, but currently I'm just still short in the Aussie buck, doing okay, and short in gold, doing okay. Some of you could have took that dollar CAD trade we talked about last night, that short on the retest of the channel breakout to the downside. I think that's holding up pretty well. I think you'd be up maybe 15, 20, 25 pips, something like that. But other than that, our topic today is going to be on why the common reasons why new traders fail in Forex trading. So what I'd like to do is Andrew and I have a little list of topics we'll go through. And of course, we'll be looking in the chat here to hear from all of you to see what you think about our topics and if you have questions. And then at the end, we'll just all sort of have a chat together. So feel free to chime in anytime and post your topic or question, and we'll go over it with you and go from there. What do you think, Andrew?
Yeah, I'm just looking at Potter's comment. LOL, this should be good. It will be good because it's one of the most important conversations that we have in Forex. Because most of the people, I would assume, are in need of some counselling on this. So I'm not talking about in this room so much, but certainly newbie traders, many newbie traders come in by the wayside. Come in and then fall by the wayside very, very quickly. And for me, Jason, I see them making the same mistakes week in, week out. It's just a common occurrence, and that's why I like to always talk to people about it, because there might be something in, say, the half a dozen or a dozen topics we're going to mention today, something that you might think, yeah, gosh, that's something that I'm really, really weak at, something that I really should be concentrating on. I'm hoping that most of you know these already. I'm hoping that most of you follow these. Follow these in the, and you don't make these mistakes, but there might be something. There might be a little mistake that's just niggling you that you always, repeating, and that's what I think we're going to try and to highlight today, so that you might be able to tick that box and say, yeah, I want to avoid that in the future. But I think the reason, first of all, we haven't discussed this, Jason, but let me just pipe in my little 2 pennies worth before we get going on the list.
Yeah,
I think one of the biggest reasons why people fail is their expectations, and I think their expectations when they come into Forex trading has been hyped up by all the stuff you see on the internet and all the stuff you see from these get rich quick charlatans and what have you. They hype it up, and people want to give up their day jobs, and they hate their bosses, and they want to throw it. They want to throw it all in, and they come in with expectations where they think they can actually do all that, throw in the job, and they're going to trade Forex. They're now a Forex trader. So they're coming in, they're going to work with a $500 account, and they're going to turn that into an income.
Yeah.
So those expectations, which leads to all sorts of problems.
Yeah.
But that is the key, I think, to the errors that people make, is the fact that people coming in here expecting too much. What do you think about that?
I think it's totally true. I think you hit the nail right on the head. I mean, that's what lures people in. And like we mentioned, I think a couple of weeks ago, it's really a double-edged sword, right? Because we hope what happens is all those ads and Lamborghinis and helicopters on yachts and all that sort of crazy stuff sucks people in. And I just hope they don't blow out all their money before they find something that's decent, because there is good stuff out there. There's good stuff out there. There's good content. There's good courses. There's a lot of free stuff. There's good people to work with, but some people don't make it. They just don't last, If it seems too good to be true, it is, right? I mean, that's just the bottom line in life, and you can get lucky. I was just talking with a trader last night, matter of fact, that said, you could be following Andrew or myself or some other trader who's been doing this for a long time. They could have 2, 3, 4, 5 losing trades in a row, and you could have a darn monkey click the button and they could be right 5 times. And then who do you believe? It's just over time. It's just over the time, that little tiny edge, like we talked about last week with the casinos making their money off that little percentage over and over and over.
Well, I'm just preparing a series of videos where we are, and one of the videos that I'm doing today, in fact, was on risk management. And I just pulled out one of the books from my shelf here, and I was just, because I'm always reading and learning myself. Yeah, and I just I was reading his it was, this is the book here. This is the one I was reading today. It's called the Trading for a Living. I had it many years. It came out many years ago. I just pulled up what he's got to say on risk management, and pretty much it's all in my. I've covered it all already. But one thing he said was that you can have a winning system. Most people can have a great. Sorry, that's my squawk shouting at me. But you can have a great winning system. But it's absolutely no good at all unless you have risk management and the psychic behind it. So you can follow me, and I might call 6 out of 10 trades right. Jason might call 7 out of 10 trades right. But you can have a great winning system but still lose money, and that's what I think is a bit of a the untold story about trading. Really, it's not all just about picking the entry level and the stop level. It's much bigger than that, and people don't realise that.
I like looking in the chat. One person says I make $1,000 every 2 hours. The next one says I make $2,000 every 1 hour. I make 100% a week. So sort of funny. But
Potter, can we give this guy Potter a job, Jason?
I know. Hey, I mean, I'm in the wrong spot for sure. For sure.
No, when I say job, I meant as a comedy artist, because that's
that's funny.
He knows he's exactly. I mean, exactly. That's the type of things you see out there. And I was also chatting to a broker today regarding another issue, and he told me there's an educator out there that's selling a trading system, and I see him on all the the shows. I get the emails, I get all the marketing, the flyers, and what have you. He told me, and I don't know how true this is, so I'm not even going to mention the guy, the marketer's name, but he told me he made $15 million last year. Selling a course, $15 million.
Yeah.
And all the people that bought that course, I can bet your life now they're not making money.
Yeah. It's tough. I mean, if you can do it over and over that long, there's only a matter of time before you blow it up if you're leveraging too much. And that brings me. I got a Skype ping that says Andrew looks a bit dark, and you are sort of in a little shadow, I guess, but it's okay. I can see you okay. Yeah, I like your setup. We've been joking about this for a while now, because you got this beautiful setup. You got 2 cameras. I got my darn green screen behind me for my video, and that's all we get. So it's funny.
Hang on, it's gone darker. I don't know. I've actually put my studio lighting away just to give me some space.
No, that looks better already. That looks better already. Okay. Yeah.
I tell you why it's dark. It's nothing to do with my setups. Believe me, I've got everything. It's the fact that the weather has turned, and we're about to have another downpour of snow. So it's got very gloomy out there, as you might be able to see out of my blinds there. It's I've just literally had to run to the school to pick up the kids because the school's closing early. We're about to have a big downpour, apparently. That's why it's getting a bit dark in here. So I apologise if it's dark.
Yeah.
But
somebody else just said I think it's the window behind him too bright. So it looks good though. I can see you just fine. We don't need to be on some kind of beauty pageant here, looking at every little thing. I mean, so it's all about the results. But the next thing on my list, because I want to make sure and go through some of these things, is trading too many pairs. I mean, what's your thought on that? I mean, do you feel like that's good or bad? Because there are some traders I know in the premium room that trade a lot of pairs, and they split this little tiny bit of risk on all these pairs. Sometimes they do good, sometimes they don't. I mean, what's your take? Do you think a new
I'll tell you exactly. I think that's a really good question, and I'll tell you, I'll tell you my answer in that.
Mm-hmm.
Before I came onto forexsignals.com, which is about 3 months ago now, I've been trading since I left school, 30 years ago. But I've been trading in front of the screens now since about 2004, and and normally I would focus on 4 or 5 pairs. Okay, now since I've come to forexsignals.com, my job now, sideline making money in my own accounts, is to talk to people about all the setups that they throw at me. They ask me about this and what. So consequently now, I'm looking at 28 pairs.
Right.
And for me, I've got a reasonable brain, but I find that really hard to digest that.
Yeah.
So it's only since I've joined Forex Signals that I'm actually looking at everything. But before, I've just focused on 5 or 6. For me, as a success, and I will continue to look at the 28 because I have to comment and will comment. But for me, as as my own trading account, I will still just trade 4 or 5 pairs, and I won't start going into all the minors. And I get to know the personality about pairs. I know you love the Euro Oz. So you get to know them. So I would say absolutely, if you can just focus on 3 or 4 pairs to start with, then that should be enough. And quite honestly, Jason, the other thing I would say is if you cannot make money on focusing on 3 or 4 pairs, believe me, you won't make money by trading 28 pairs.
That's right. That's right. I agree with you. And I've had the same thing. I mean, how many people in the premium room in this last week heard me say, I don't trade that pair, but I can pull up a chart and look at it. I've never traded that pair, but I can pull up a chart and look at it. And I try to do my best, but I just don't know them, and I end up, I'm very honest about it. I say, look, I don't have a feeling on this. I don't trade it, like the New Zealand yen and things like that. They're not rare currencies. I just don't trade them. And to be really honest, I think looking at those pairs is sometimes just noise, if you will. And when we talk about that slight edge, I just talked about this yesterday, so perfect timing. That slight edge, that casino mentality, how the casinos always make millions and millions of dollars off of that little edge they get. The cost of doing business and trading is the spread and the commission. And when you get to some of these more rare exotic currencies, the cost of trading them is more expensive. I think we all know the lowest spread, the lowest commission is the most common pair, like the euro dollar yen. So if you trade over and over and over again, you take that cost of doing business and you lower it just a little, you become more profitable in the end. So,
well, you're putting the edge in your favor, like you said. Casino, the casino makes its profit every 36 spins. What is it? 36 to 1, and there's 37 spins, including the zero. So that's their edge, and they just do that time and time again. If you can trade pairs with lower commission, concentrate on the few pairs, then you're giving yourself a bit of an edge. And I totally get that. This game is all about getting an edge, and when you get your edge, knowing how to deal with it, and that's that's what the game is. So I totally agree with that. The less, the better. And if you can't make it in a handful of pairs, then you're not going to make it in 28. I can assure you.
What do you think about this topic? Because I hear this all the time. I've heard it. I saw it in the chat just this week. I know you addressed it once. What do you think about traders who say the market's out to get me? Like, I put my stop at 51 pips and the thing goes 52 and then it goes totally in my favor, and it happens all the time. I mean, isn't it true? I mean, I know when I started out trading, you feel like, who in the world is this broker scamming me? Because this thing hits my stop always and then it goes totally in my favor. I mean, what do you tell somebody like that? Because it happens all the time.
Yeah, it does happen all the time, but everyone knows. And much we sometimes think that the broker's got a direct line into your terminal. I don't know about you, but I'm not big enough in the market.
Me either.
For the broker even to know that I'm even trading. So it's completely irrational. But most people in the room would know that as well. But it's a common thing to think that. Everyone knows it's not. The broker's not out to get you, but it sometimes feels like that. But the idea about that is an emotion that's coming in there, and that can lead to like a revenge trade. You think the market's out to get you, I'm going to get it back. There's no point trying to find the market. I've read it in books, I've seen it before, but it's true. The market doesn't give a damn about you.
Right.
The market is going to be there tomorrow. I think Mark Douglas said in his book, make sure that you are too.
Yeah. Right. Exactly.
It's so the market's not out to get you, but don't let that thought, don't let that creep into your mind, and let it affect your trading. Yes, sometimes it feels like that. You stopped out just at the level, but just on that, on the actual stop level there, most analysts and books will tell you place it 2 pips above or below a swing high, swing low. Well, if you're doing what everyone else is doing,
right.
The chances are, I don't like to use the two pip stop rule personally. I like to pick something a little bit off the wall. 2 pips, add on another 6 pips, and adjust the trade size by 0.01 or whatever it is.
Right.
Don't put it in the obvious stop and then you're not going to think the market's out to get you.
That's right. That's right. And you know what I told a trader, and I keep saying this, I don't want to be like a broken record, but I just literally talked about this week. I said, if you really feel like that's the case, because you can really feel that way, right? I mean, I know I have, especially when I start, I'm like, are you kidding me? Like, I've been watching this trade for a day and it's hit my stop by 2 pips and then it went 300 in my favor in the next 2 days, and it happens over and over again. I just tell them this is the easiest way. Pull up a web-based server or web-based broker that's not yours, or download a MetaTrader from a different broker that's the biggest one in your country, and put up the chart side by side, and you'll see they're the same. They're the same. There's different spreads, of course, if you have a mini versus the ECN, and there might be a pip or two difference, but it's always a pip or two different, not just on that trade. And there is no doubt that during news events, some brokers react different than others. So if you're trading on a news spike and it happens, in my opinion, that's off the beaten path, because who knows what's going to happen on a news event with your smaller broker versus a bigger broker. But overall, you will see, you pull up the biggest brokers in the US, the biggest brokers in London or Australia, the charts are going to be all the same. That puts you watch that for a while, and that helps put your mind at ease, like, yep, I guess they aren't out to get me. It's just the way it is. So but anyway,
but also about placing your stop exactly where I don't know. I mean, I've read somewhere and I hear that some brokers are unscrupulous, and they will know there's a mass of stops there, and they will widen their quote just to take out those stops. I'm absolutely sure that it happens. With certain brokers, the idea is you go to reputable brokers that don't have that type of reputation. And I certainly know my two brokers that I use. It must have been a year ago or more. I thought that is just wrong. Why was I stopped on that level? And I did actually call them up, and I got a justification of it. And it was a valid justification. So and if it wasn't valid, then of course they would have reinstated the position. Chances up. Just on that thing you mentioned about getting stopped out and then moved 300 points against you. I had one last week, and in fact I was talking about it in the room. There's 5 decimal places in the quote, and I was stopped out to the 5th decimal place, and it moved the same way against me. Now I couldn't have pinpointed a more accurate place to place a stop and got stopped out. Right. But I tell you now, Jason, it doesn't bother me to the extent now that I will take revenge on the market. I smiled. I was laughing about it in the room because at the end of the day, it was only by my same risk tolerance on every trade. It's just one trade of the sample of many. So it's just one trade, and it happens now and again. But I'm now at the stage where if it happens, I smile about it as opposed to thumping my fist on the desk about it. As much as because it's just one trade out of many.
That's right. That with the dollar CAD trade too that we had that I posted, and everybody seemed to be liking it. I think a lot of people are in on it. The channel on the daily, and it got stopped out after Trump opened his flapper, right? And I made the analogy in the stream yesterday or the day before. I think it was yesterday. You just have to think of it like the casino. The casino doesn't get totally panicked if somebody wins a $5,000 or $10,000 jackpot on a slot machine today, because it happens all the time, and they still have that edge, and they make it all back and then some because they have that consistency. So the next
when you say Trump opened his flapper, the dollar index dumped. Stock markets fell out of bed because Trump didn't say anything. I know. Isn't that amazing? He wasn't supposed to say anything because it was a talk about his conflict of interest. So that's what it was billed at. So he wasn't billed to talk about fiscal stimulus or tax cuts or dollar or China. So he didn't say anything. So the market dumped. It dumped for him saying nothing. He wasn't supposed to say anything. I think we're into really exciting times with Trump coming up, because when he does start saying things, that's when you are going to see some moves.
I know, and we're seeing that sort of starting a little bit already this week in the Great British Pound as well as Great Britain. There, they're waiting for that news to come out next week. I think, and you can correct me on this. Is it the parliamentary discussion next week or something? There's something going on there where they're going to start to decide how hard or soft the Brexit is. And the lady talked about it this week and said something that wasn't sounding that great, and the pound fell apart again.
Well, basically, for those that don't know, there's Brexit Article 50 is going to be triggered in March. And there's 2 possible ways of exiting Brexit, either hard Brexit or soft Brexit. Hard Brexit basically means that we're going to walk away from the single market and have no dealings with the single market. We're going to stop immigration. and just walk away. Now, the markets don't necessarily like the thought of a hard Brexit. They much prefer the soft Brexit. What's happening next week is that Theresa May she's going to, that's the Prime Minister of the UK. She's standing up in Parliament, and she's going to be outlining the government's view on Brexit and their progress to date. So last weekend she muttered something that the market read into be a hard Brexit, i.e., immigration's first and we're leaving and all that stuff. So the market's dumped, and that's why sterling's down at these levels now, quite honestly. So on Tuesday she's going to, and then the next day she followed up by trying to say no, the press misreported her and the press got it wrong. Well, the markets didn't buy into that, so they carried on selling sterling. And on Tuesday she's going to come out and start trying to put the record straight and talking about the type of Brexit that the government's going to be angling for. So that's on Tuesday, apparently.
Yeah. You got it. I have just a couple more points. A few traders say that they don't have a good connection. I think everything's great. I think it's coming through on YouTube. If you go on the little slider on YouTube where it says live, you can drag it to the right. Sometimes YouTube lags a little bit, and we get a little delay, but try not to let it discourage you, because these will be recorded too if you want to look at them. And you're exactly right. I think we had a person in the chat say this is more about psychology or something than it is market analysis or coaching. That's right. That's what this is supposed to be. We do a ton of analysis every week. And this one on Friday mornings is for both rooms, the premium and public, where we just pick a topic and we go over things and we don't look at the charts a whole lot. Last week we pulled up a few charts, but this week we'll see if that happens or not. How about, chasing losses or gains? We already know that that's not a good thing, right? We already know you don't want to chase your losses. You don't want to get overconfident in your gains. And from the people I've talked to in the last couple months here, it seems like chasing losses, everybody knows that's bad. You lose a 0.5%, then you go in for 1%, you lose 1%, you try to get 2% back, and you keep going and going and going. All of a sudden you're down 10, 20%. But the one that I didn't hear most people talking about is getting greedy and chasing the gains. So if you make a few winning trades in a row, whether it's your recommendation or ours or your strategy or whatever it is, and then you get confident, right? You can say confidence or arrogant, right? And then you go bigger because you think, hey, this is easy. I just clicked the button and I made $100. Now I can do 200 on the same trade next time, and then 500. So I feel like
this is dangerous. It's as dangerous as It's as dangerous as. Sorry to interrupt you, Jason.
No, you're good.
It's as dangerous as the revenge trade is the euphoria trade. They're both as dangerous as each other, quite honestly. Right. Over the sample, and in fact, I've had a couple of private one-to-ones with people. It was a couple of weeks ago now, but this guy I think turned 6,000. Yeah, that's right. So 6,000 into 30,000, and I mentioned it to Nick, and I think Nick's comment was, "Oh, that one's gonna blow." Sure enough, next day he blew. So it doesn't matter. You've got to keep got to keep your feet on the ground. I think is the answer. In both losing times and profitable times.
Yeah, that's right. That's right. And I've been telling people for months now in this room, if you win the trade, if you make money on the trade, if the trade's profitable, but you're not following your risk management and your strategies, don't be too excited to pat yourself on the back. Because it's 50-50. You can get lucky most of the time and still do good. And I think that psychology-wise, even though you said 60% in your presentation months ago, I think it's a little more maybe, but the point is it's a lot. Psychology is really important. I think that more traders know about the chasing your losses is bad, just like the casino mentality, But I think that as a personal, as an individual trader myself, you sometimes get tricked to think when you're doing well for a week or two that it's okay to go bigger. I think that the euphoria trade isn't as talked about. And I think it's sometimes even worse for a trader's account than chasing is. That's just my thought. I don't think people think about that. They think, hey, I'm winning. I'm posting my trades here. Look at me. Look at all these results. But they don't really realize how they get too confident and then they end up blowing up. Anyway.
Well, for me, the obvious the way I trade is a fixed percentage of risk and a fixed, so as the account grows, my lot size is increasing. As the account diminishes, my lot size comes back down. So there's nothing wrong with going bigger, but if that's in accordance with the account size growing bigger in terms of percentage,
right.
And that is the only way really to grow an account. But not just having 5 winning trades and then thinking, right, I'm now going to up for my risk from 0.25% to 0.5% or 0.5% to 1%.
Right.
That's the surefire way, because the market will come back down to get you.
Right. Right. And another question that I had, and this is just summarizing up my little list here, pretty much. One of them was not keeping a trade journal, and it's so boring to do that. But I think you got to keep at least some kind of a journal and judge your trade 0 to 10 scale or something. But what do you think about this? What we teach a lot is technical analysis. Most traders in the rooms, most traders that I know are technical traders. They don't trade just fundamentals. But I think too many traders these days are ignoring fundamentals altogether. I mean, what do you think about that? I mean, I know you don't trade news events. I don't trade news events. I used to leave more trades on during news, and over the years, I learned it just doesn't work. How would you explain that to somebody who says, look, I don't know all about the Brexit and all these things going on in the world, but I know how to trade technically. How do you put those two together without watching news?
Well, first of all, I just don't believe I'm intelligent enough to understand what's going on in the world. I'm not an analyst. I'm not working for the government. I'm not working in the boardrooms of top listed companies. I look at the charts and I can see what's happening in front of me, and I try to take advantage of an edge of what I see in front of me. Right. So I'm just not clever enough to understand the fundamentals or understand what's going on. Had you traded fundamentals over the election, Dow Jones, we dropped 600 points on the fact that Florida was coming in, Ohio was coming in. Gold was up at 1350, well, I think it was. And now look at us. Yeah. Who are we to know is the answer. Yeah. But I do think you're right. I do think you have to have the fundamentals keeps me out of certain things.
Right.
I'm not going to be trading. For example, when we had this Trump thing coming out. Now, I took the view that Trump would be saying nothing that's going to be bullish on dollar. Now, he was going to say nothing, or he was going to say something negative. But he's on record of basically not wanting strong dollar in the past. In some town hall chat last year. So I thought there's no way I'm going to have a long position over to Trump coming in. I'd rather do nothing rather than having a long position over Trump's press announcement. Yeah. So that just keeps me out of long dollar trades. I didn't have a short dollar trade. I'll hands up. I didn't make any money. I did actually trade around 3 hours afterwards, but I didn't have a position on. But I was certainly not going to have a position on to the long side when he was talking. So that's a fundamental view, because I thought, that wasn't looking at the charts. That's just thinking, that's taking a view on the economic side of things. And that's right. So it's important to have an idea of what's going on in the world to keep you out of trades as much as anything.
Yeah, and that's the point I'm getting at, exactly. And it's hard to explain that sometimes to someone who's not familiar with the terms and the terminology and how it all works. But I told a trader a couple weeks back, I said, use the fundamentals, this news and chatter about Trump and Brexit and China and all this stuff. Use it almost like another filter. Like if you're going to use MACD and stochastics, but the stochastics doesn't line up for your trade, you don't take the trade, use the fundamentals. I mean, if you're going the direction that you feel the bias is for the currency, you get in the trade. And that's sort of, I think, the easiest way to start is you don't want to ignore all that stuff. But again, the world has priced all of that chatter into the price right now. So it's already all in there. All the interest rate hikes that people think we're going to get in the U.S. here, everything's sort of priced in already, what they think is going to happen. And it's the surprise that brings in all the volatility.
Yeah, that's the Dow theory, isn't it? I mean, you've got, I listen to all the news wires, I listen to the news wires, I listen to the Bloomberg, I listen to Bloomberg because the pretty girls on Bloomberg, but it's funny the amount of people that come in, they interview, they're economists or analysts, very rarely do they all agree on something, and these are much more intelligent people in markets than I am, and they can't agree. So who am I to agree? So it's not the way I personally trade, but yes, certainly having a fundamental bias, there's nothing wrong with that. At the moment, I'm biased to the short side in sterling. This time next year, God knows where we'll be. We could be. We could be down. In fact, I was on the way to school this week, and I just turned the radio on, and someone mentioned. I heard the word. They're talking about the markets, and I heard parity. I thought, oh, here we go again. They're talking about euro dollar, back down to parity again. Listened on a couple of minutes. They're actually talking about cable.
Crazy, huh?
So they're talking about cable parity. Gosh knows where cable will be in a year's time. Could be down at 105, 110 parity.
Yeah.
Could be back up at 140. I mean, we don't know.
Right. I remember trading, as you probably do, when the cable was over $2. I mean, that was like super strong. I mean, everybody was saying you can't sell that, and then the thing just collapsed over months and years.
Well, I do remember because I bought a video in Thailand on the back of it. So
right. And what's interesting is when I do my streams, and sometimes they're planned out, sometimes they're not. 90% of the time they're not, as you probably know if you're in the premium room. But what I'd like to do is at the end of the stream, I sort of flip through my news feeds, whether you use Twitter, whether you use Bloomberg or Financial Juice or Forex Factory, whatever you use for your news, your sort of updates. I flip through that stuff. 80% of it is the stuff I just talked about. Oh, the dollar yen's falling. Oh, we're seeing a support level rise. Oh, it's already in the markets. So it's just that these guys are being paid to type something up. And there's if the markets are flat, they'll say markets are anticipating Trump's speech, or it's just it's a lot of fluff, and it's usually all behind, and late. So, yeah.
Loving those. All right. Yeah. Okay. That's right. Yes, indeed. What do you think about this, Jason? This is something I put down on my little pad, and something that I think when I was migrating from the floor to the screens those years ago, I've got the trader mentality, but it's a whole different ball game. Yeah. From the trading floor to the to the screens.
Yeah.
But one thing I found myself doing initially was, obviously reading lots of information, but trying something out and then chucking it in very quickly.
Yeah.
Looking for the next thing.
Yeah.
Basically swapping, trying it out for 5 or 6 goes, 3 winners, 3 losers, 4 losers. Okay, going on to something else. Moving on to the next system. Yeah. Basically, I think in the past I must have thrown out some great strategies because of minor drawdowns.
Yeah.
And I think that is a common cause that a lot of people do. They swap very quickly from what could be a winning system, blaming the system, and really they should be blaming. Hate to say it, but blaming themselves for not being able to deal with the system.
That's right. What do they call it? Shiny object syndrome, where you see the next big thing, and you got your thing that's all dirty and muddy, and it's not working, and then you see somebody selling their big shiny thing, and you're like, "Whoa!" Like a fly going towards the light bulb, And it's tough though. It's tough when you're doing it by yourself because you don't know what else to do. I mean, you think about it. If you're all by yourself and you don't have a forum, you don't have a chat room, you're all by yourself doing your thing. Maybe you got a buddy or two there learning too. You're sitting at your computer, you're putting in this time, and you have losses. Or your winners you cut short all the time, and the losses you let run. What do? You look for the next thing because it ain't working, But most of the time it's in your head. You got to be strong-willed on things. Just yesterday morning, in the stream that I did, I took a short on the Aussie dollar, and I have this sort of stepped-in sell on gold. And it was sort of funny. We were joking around a little bit about it. At least I think we were in the premium room, because I said, I'm going to, add to my short here. We're going to leave it here. And I said, what do you guys think? And everybody in the room said, I think it's going up. It's going up. It's going up. And then somebody said, don't let us change your mind though, Jason, and it's one of those things. I like getting all the input, as you should, but you got to stick to your own plan, and now, this little trade is doing good for me. But if I would have listened to other people, I would have been out or in a loss. So you have to use your own strategy and stick to it, because otherwise you don't know if it's working. And that goes back to the journal again. If you do this sometime and then you listen to this guy sometime, and you listen to Andrew in the morning once, me in the afternoon, you don't know. How can you repeat that? Yeah. How can you reproduce it?
That's why you can't buy a trading system off the shelf. You can't buy you can't spend $99 and just on an EA and just run it and sit on the beach. It's not going to happen. You've got to divide. You've got to work on this yourself. It's all because, as I say, it's about you. It's not about It's not about it's not about the system. It's about you as a person, and that's what I think is it's key. And that's why these rooms do help. We took today. I've been in live on the screen the whole day. I took a short pound. It took a short pound yen trade. There's a couple of other guys that one was already in a pound yen trade apparently for the last couple of days, and one took a short 10 pips higher up than I took it, which was we discussed it, and I put my hands up actually, Jason. I didn't tell you about this. I entered And he said, well, wouldn't you do this? So I thought, well, hang on, yes, I won't mention his name, but yeah, actually, yes, I think your entry is better. It's a better entry. Had I had this conversation beforehand, I might have scaled in my entry and entered one here, one, say an 8% here and an 8% at your entry and getting in there. Because I had already had my exposure in there, I didn't take a second entry. But I learned from, we sort of like, chatted together about it, and thankfully we've all had pips for lunch, so it's okay. It worked out nice. Good. But it's the room environment where you're not, you are talking to people, and and literally, we're having long voice, so of course I'm chatting, but there's that type of environment that that I think we're trying to create here in the premium room, and of course in the public room, where people can feel that you're part of a little community.
That's right. I had the same thing happen. And if you're in the room, you know who it is. I haven't been trading the Euro USD for a while because I'm very mixed on it. And one of the traders said, "Can you at least look at it?" So I pulled it up and I was like, "Wait a minute, there's a couple things in here on the shorter term time frame." And I drew some boxes and some arrows of where I think it would go, and the thing worked out really, really well. I didn't take the trade, but I mean that was a perfect setup. I just would have never looked at it. And you think about it, if you've seen my screens, I have 6 currency pairs up with a couple crosses, and I trade basically 4 or 5 of them most all the time. And it's just too hard to look at so many pairs. It's just too hard, especially if you're doing a top-down analysis where you're going from the monthly, to the weekly to the daily and downward. So let's see. I don't have anything else on my list. I mean, I have increased leverage, blindly following others, trading too many pairs, micromanaging trades. We didn't talk about that, but that's an important one too. This Aussie dollar yesterday, I'm not saying this is a Superman trade or anything, but it was a perfect example because I was short Aussie dollar at the support level. I think it was 75.20 or 75.25 or so that we were watching, and it was pushing up, and people were saying, "Oh, this rally, this might take us out. What are we going to do?" And I said, "Hey, I'm staying. I already know what my risk is. I'm staying in." And the thing now, it's in really nice profit, and it's just about trying to micromanage is hard because, and I talked about it in the stream live. I said, look, if you get out of this Aussie dollar short when it's not even coming close to your stop and you planned it out, and then it just falls into profit, you're going to kick yourself, So you got to trade your plan, What do you do on that? I never asked you this. When you put a trade on, do you go in and tweak around on it a little, or do you ever move do you say, "Oh, I don't like this anymore. I'm just closing the whole thing, even if it's in profit or loss a little bit"? What do you do?
No, I would. Okay, this leads me on to one of the topics that I want to talk about, and that's basically counting your profits. When they're still open, looking at the dollar value going up and down. That becomes very emotional, and that basically leads to the tweaking. So I tend not to look pip for pip when I'm in a position. I am here all day long. I'm sitting in front of these screens all day long. This is my office. I do the school runs. But I am here all day long. But I don't look at my open trades pip for pip. So consequently, I'm not forced into micromanaging. Yeah. If I were to look at because I know my downfalls, Jason. Yeah. If I were to look at I'm up 50 pounds, I'm down 50 pounds, I'm up 150, up 200, up 300, I'm down. If I were to do that, I would get emotionally involved. And people say that you should trade without emotion. Well, I can't trade without emotion. I'm an emotional person. Yeah. I just try to avoid those emotions, and I trade the best way I know to avoid emotions, and that's not to count pip for pip, trade for as it fluctuates. Yeah. But the caveat to that is, if I've made a mistake, and I'm in profit or in, when I say I made a mistake, it's just right ahead of an announcement that's coming out from the news wires that I didn't know, I hadn't looked at it, or for whatever reason, if I picked a completely the wrong level and I thought I was trading something and I traded something else, then yes, I would cut out if I'm wrong, for profit or for loss, if I've made a genuine mistake. If the trade ticks my plan, then I've got no reason to tweak it, to be honest. Yeah. Now, I did. Could you bear with me a second? Okay, come back. So Sorry, it's my daughter trying to do her homework.
That's
Sorry about that.
that's
Sorry
real
about
life.
that. That's real life.
Yeah.
So today, for example, I did have a short pound yen trade. I was going out. I've had quite a good week in terms of percentage gains for the week. It's coming in for Friday afternoon. I moved my stop into a 30 pip take profit and thought, okay, if it hits my stop on the way back up, I'll bank that and leave that trade for the week. So I just looked on that one. So I did tweak the order, if you like. I'm honest, I've got nothing to hide. So I did tweak that order today. I moved my stop down into lock. It was basically trailed a stop down into 30 pips in profit. I came back from the school and I looked in, yes, and sure enough, over the numbers, it pips back up and stops me out for just a 30 pip gain. That's okay. It rounds off my week nicely. So I'm not saying I never ever tweak it. I won't tweak it because I'm looking at it up and down, but I'll tweak it if for a valid reason. For me, that is a valid reason.
Yeah. I like that answer because I do the same thing, and you've seen me do it live many, many times. If you're in the premium, I move my stops down if I'm in profit all the time. If we pass out a swing low and I'm selling, I'll move it down a little bit. That kind of stuff is good. One of my friends that I learned trading with years back, his problem, and I think you might remember. I should post a link actually in the chat of our discussion. Remember back in the old days, Andrew, when we did those free 10 days, those each of us did 10 videos for 2 weeks, and we were pulling our hair out trying to get these videos done every single day. I think I talked about my trading buddy back then, but him and I would be on the phone all the time, and he could not stop micromanaging his trades. That was his biggest problem. He would have a little bit of profit, and he'd say, "Oh my gosh," and he'd take it. And then the losses, he would just bite his fingernails and watch it go to the stop,
Well, and that's when you mess with the risk-reward ratios. And if you mess with that, you'll find yourself, if you do keep a journal, which you should do, you look back at the end of the month and you'll say, yep, I took less than 1-to-1 there. Yep, took less than 1-to-1 there too. Oh, well, look at that loss. Massive point you make there, Jason. I totally agree with that.
Yeah. Let's see. There is a question or two in the chat here. I wanted to look at that here a little bit. I'm also trying to find that link for you guys. Let's see. Did they share the link at all? Do you know, Andrew? Where you're doing those intro videos? They've been posting them on YouTube and making them public, so I'm assuming they want everybody to see them, right on?
They're not a secret, but I think they're they're there. I didn't post the link. I haven't checked in the room, to be honest.
Yeah. Let's see. Video library. Let's see if I can find the link here. There was a question in the chat about which pairs do you recommend trading? Here's the link I wanted to post. Which pair do you recommend trading during an Asian session?
Well, I think you get good moves in the Australian dollar, of course. The Asian session. I mean, I'm not in the Asian session, but naturally pairs move more in their own session. So, Japanese, Aussie, just Japanese currencies, Australian currencies, and naturally, the biggest traded pairs of them all are the Euro USD. So that's not going to work for you necessarily if you're looking for just Asian pairs. I mean, the Japanese, dollar yen. I mean, dollar yen is a good one. US dollars. Remember, 83% of all forex trades are done with the US dollar on one side of it.
Right.
So trading, Aussie dollar, Aussie US dollar, is as good as it gets, and you actually get some quite nice moves in there at the moment.
Yep. I agree with that. I did post the link here for you guys to watch, and it's just a link that shows Nick's videos, Andrew's videos, and my videos from that when we did that free 10-day intro. And
good. Yeah.
You will believe that I have an actual office behind me, not just this darn green screen, because I didn't have that up back then. And then they did put the link on here for your free educational videos, those little snippets you've been doing on the basics of Forex. So that's good for everybody to see.
I'm doing another one this afternoon on basic chart types. Actually, Jason, I did it yesterday, but I've actually pronounced the name of the it's Steve Nissen that does that basically created the candlestick charts, or bought them in from Japanese rice traders, many 18th century or 19th century or so forth. And so I'm gonna have to redo that video because I've got the name wrong.
Yeah, that's something. That's a good times. I know. I'm still grinding out my Elliott Wave video. I mean, Elliott Wave, it's huge. I mean, they have Elliott Wave International. You can buy all these subscriptions. A lot of traders only use Elliott Wave, but it's something that I've used. It's something I look at from time to time, but I'm no master in it. So this has been probably one of the most difficult PowerPoints and presentations I've made because I got to study every little thing. So still grinding that one out.
Yeah, well, I'm looking forward to it. I mean, we're all aware of it, and you see Elliott waves all over the
Mm-hmm.
all over the charts when you look at them. I mean, you might not be able to identify them, but they're there all the time.
Yeah.
But I don't think I've ever placed a trade on the back of them.
Yeah. No, I haven't either. Usually what I use Elliott Wave for, if I ever do, which is rare these days, is to project my target points. That's what I usually look for.
Yeah.
Or breaking down and trying to find the micro waves inside the big wave to get entries to continue with the trend. Those fractals type entries. Let's see. Anything else you want to add, or you think we're good for now?
No, I think that's good for today. I mean, as I say, we come in every Friday. We're not giving. We do our sessions all day long, analysing markets and what have you. I mean, I can come into the public room. In fact, I popped in here yesterday and put a trade on. If you remember, you guys in the public room.
I saw that. Yeah.
Yeah, and we all made some. Well, hopefully you made some money on there. I just buzzed in, buzzed out. But at the end of the day, me calling trades, some work, some don't. I mean, but the purpose of these rooms is to show you that we're still here, give a bit of an insight to the line of thinking of someone that's been doing it for so many years. Because I don't think there's many people in the room that's been doing it certainly as long as me. Maybe not even as long as yourself, Jason. You've been at it for 15 years or so. So it's just to share our ideas. And if you don't like it, there's no problem. You can just go like that. You just mute us off, and you just carry on doing what you're doing. But we'd like to pop in and say hi. We're always available for comments. So Jason @ or Andrew @ forexsignals.com. Right. Email us, and we'll get back to you normally within the day. But that's the purpose of these, and hopefully you find these little rendezvous worthwhile.
Yeah, very good, very good. All right, everybody. I think we'll cut it off for now. And be safe trading. We don't like to leave trades open over the weekend. And that's sort of what I like to do, is get out of things before. So I'm going to be looking at getting out of the gold and Aussie shorts. I think they're doing well. But if you have questions, like he said, just email us over. We're going to be together live again for our next stream in the premium room Monday morning. And then Monday afternoon and Tuesday, Wednesday, Thursday, we do our own thing in there. And then we'll be on every Friday here. So if you have any ideas for new topics for us to cover, like today was common trader mistakes for newbies, just let us know and we'll try to get it done. Thanks a lot. Have a great weekend. Yep. See ya.